Namaskar. We have, I think, released some 5 videos on GFR 2017, General Financial Rules 2017. Now we are going to discuss rule number 25 and 26. Normally this is again the principle relating to expenditure and payment of money from the public account. Actually, you spend money from the Consolidated Fund of India or Contingency Fund of India. These two are government money, that is public money, revenue collected or whatever it is, and public account. You will spend from public account, that is nothing but government remains as a trustee for the public, like General Provident Fund, Public Provident Fund, anything, any savings you put into government this thing and you get back with interest and all. That is what is called public account. So you make a commitment for making payment. So you do from these 3 accounts only. So if it is the same PPF account or GPF account something, you are using the public account. Now, provision of funds for sanction. So when some sanction is issued, first you have to provision the fund. If fund is not there, you cannot issue sanction. That is simple as that. First you have to see the availability of fund. Fund will be either from normally from Consolidated Fund of India. This contingency fund we already discussed. When there is emergency, there is no budget provision, but we have to spend to safeguard that is in public interest, to safeguard the public or something, then government can release from the contingency fund, which will be recouped later on. So that is second part. Third part is public money, that is you release the GPF money to the person concerned, so you have to draw the money. So for that fund availability will be there. So now all sanctions to the expenditure shall indicate the details of the provisions in the relevant grant. So you will say, normally the sanction will say the bottom, the expenditure is debitable or met from major head. You will write which head and which grant. So every year the grants are allocated department wise. So it might change also. Grant number is likely to change. Major head will never change, but grant number can change. So you have to indicate in which grant this money is available for the department. So you will indicate in the sanction itself grant number, head of account, and appropriation, whichever appropriation. Because from that appropriation only we are spending. So this has to be compulsorily indicated in the sanction order. This is rule number 25(1). Normally we see the accounts administration when they issue orders, any expenditure sanction, they give in the bottom before signature. They will say this expenditure is to be met or is being met, something like that. They will indicate where. Then they will give the grant number, etc. Now, all proposals for sanction to expenditure shall indicate whether such expenditure can be met by valid appropriation or reappropriation. So now it is proposal. Sanction, when fund is there only you will be doing. Now you are going to make a proposal. When you make a proposal, you have to say whether appropriation, fund allocation is there. If it is not there, what is the proposal? We are going to use it from the reappropriation. Normally in every session you can go for reappropriation, but in government in general normally it is done in September, October. So in the winter session, the reappropriation is normally done across the board. But in every session you can go for reappropriation if the situation calls for. So you have to say in the proposal itself, yes, there is an allocation, appropriation is there. It is proposed to be met from this appropriation. If it is not there, we are proposing for reappropriation in our RE stage, revised estimate stage. So that has to be indicated in the proposal. So people who prepare the proposal should say the funds are available, or if not available, that we are asking in the reappropriation. So now it is subject to acceptance for reappropriation by the competent authority. Only then your proposal will be taken up. This is rule number 25(2). No, 25(3). In cases where it becomes necessary to issue a sanction to expenditure before funds are communicated, the sanction should specify that such expenditure is subject to funds being communicated in the budget of the year. That means there is no fund, but there is an emergency. It is like you are going to meet from the contingency fund or something like that, let us say. So it will be adjusted against appropriation later on. So we have to say that very clearly. Now funds are not there. So it is with the special approval. So there is no other scenario. You have fund, indicate. You don't have fund, but you have to spend. There is no escape on that. You say separate proposal is being made for appropriation or reappropriation, whatever it is. So now it is met from the contingency, something like that. This is what it means in rule number 25.3. 26. Now responsibility of the controlling officer in respect of budget allocation. Actually each head of office, the lowest level is head of office. They will be placed some funds. It is their responsibility, even including head of department, including secretary, chief accounting officer. What is the responsibility? The duties and responsibility of a controlling officer in respect of funds placed at his disposal are to ensure that the expenditure does not exceed the budget allocation. So if when an amount is allocated to an authority, he is the controlling officer. He should ensure that whatever is spent within the power, etc., because you can spend within the power only, you will approve it and only then, or you will take approval and then spend. But budget you can't, approval is there, but budget is you can't spend. You have to ask for budget fund. So approval is different and funds availability is different. So that is very important. So the controlling officer should ensure that the expenditure does not exceed the budget allocation. The expenditure is incurred for the purpose for which funds have been provided. You collect fund for some reason, but you can't spend for something else. It is wrong. So the expenditure is incurred for the purpose for which the funds have been provided. So you can't take some other fund and see, reappropriation is something different. We will discuss in the delegation of financial power. But you can't simply say, okay, fund is not there, something else, you use it. No, you can't do. You can use it for the purpose it is provided only. This is the responsibility of the controlling officer. And every expenditure is in public interest. The question arises, in fact, in some other TADA video I have told, I think, what is public interest? Government functions for the people. It is by the people, of the people, and for the people. So government functioning is only for the people. So any department, whatever it does, ultimate goal is for the betterment of the people of the country. So when you do the things for the objective, you do anything to fulfill the objective of a particular department, it may not directly go into the public thing immediately, but overall goal, if you see, it is in public interest. So in that case, normally public interest means the department functions for some objective. Those objectives are for public interest. So when you do things towards achieving that objective, it is public interest. So the expenditure is incurred in public interest, because people can question, Arey, you are buying some stationery, what is that you are serving with that for public? The question will arise, people can ask. That stationery is used for running this office. This office is doing some work which is mandated to do these public surveys. So this stationery is not directly connected to the public service, but without this stationery, the department running will be in trouble. The department running is required for the public surveys. So it is public interest. That way you have to take it. So to context, I made this point because in my service, the inquisitive people used to ask me, what is there in this public interest? I mean, a very senior level officer also used to ask, yeah, you put it everything on public head. No, it is not like that, sir. This work, I used to reply like that. Okay. And that adequate control mechanism is functioning in his department for prevention and detention of errors and irregularities in the financial proceedings of his subordinate officers, and to guard against waste and loss of public money. So not only his own work, subordinate authority also, he should put in a mechanism which ensures prevention of error, detection or prevention of error. If there is an error happened, it is detected easily. And prevention of irregularities, you have to put in a mechanism. For that only all these accounts, record maintenance, connecting paper, submission of reports, all those things will come in this. And the expenditure is not wasteful. That anyway we have standard of financial propriety we have already discussed. So you need not be a frugal and you cannot be a spendthrift also. A person of ordinary prudence, what he will do. That way you can do in public spending also. And loss of public money also should be prevented at all cost. It is the responsibility of the controlling officer. We will see remaining part in next videos. I am making small videos only to ensure people, my viewers, are not bored. Thank you.